Hi, this is Warlow from Business Loan Services and welcome to my Friday Business Finance Bulletin, my weekly roundup of news, tips, ideas and strategies on raising finance and dealing with banks. So what have I got for you this week? Well, we're going to be looking at improving confidence levels in the economy. We're also going to be looking at probably a less positive news about what banks are doing as regards to the funding for lending scheme. Going to be seeing what the government is doing to tackle late payment. And in my business finance tip of the week, a chat with Market Invoice, a crowdfunding invoice discounter, and what they're doing to help small businesses grow. So let's start off with some good news. I was looking at a survey this week carried out by Close Brothers, an asset-based finance lender, and as part of their regular business barometer survey series. And they found out that 50% of businesses are now saying that they're planning to reinvest in their business over the next 12 months. Now that's great because that type of reinvestment has a cascading effect throughout the economy. In fact, 34% of those surveyed said that they are planning to see an increase in sales turnover this year. Now, how does that manifest itself on the ground? Well, of those surveys, of those firms surveyed, 47% said they are looking to take on additional staff over the next 12 months. And that's good news for everybody. Now, you know that there's a constant message I have put across in these bulletins that growth typically needs finance. And it's come out in this survey whereby 40% of those asked said that they will be looking to get finance this year. So, a lot of good things happening. And that's not just coming out in one survey. There's another survey I saw this week carried out by the government department, the Business and Innovation Skills Department, as part of their kind of periodic small business survey series. Now, they found that 51% of those businesses surveyed said that they're planning to increase turnover. So kind of just a little bit more than what came out in the Close Brothers survey. But more interestingly, 78% of businesses said that they are now trading profitably. And that takes it back to figures seen in 2007, 2008. So you can see that many businesses are now beginning to recover. One other interesting fact that came out in this government survey, again, is about barriers to growth. I've mentioned in previous bulletins, and it's really starting to come out, that access to finance is now being seen as less of a barrier. And in fact, only 5% of those businesses surveyed by that government department saw access to finance as a barrier. So, some real good news there. Now, what about the bad news? Well, a funding for lending scheme. And this is a scheme that was launched by the government at the height of the credit crunch to try and encourage banks to lend money. How the scheme works is the government gives cheap money to the banks and the banks are then expected to on-lend it to businesses at an equally cheap rate. Well, you know, the scheme has never really taken off, and the last quarter figures, quarter 4 for 2014, come out and show that the amount of money currently lent through the scheme shrank by 800 million, and over the whole of 2014 the pot has shrunk by 2 billion. So it just shows, you know, the scheme hasn't worked particularly well, and it's running up until the end of 2015, so it'll be interesting to see whether it carries on from there. Now, what about a late payment? Now, the government has really picked up on this over the last couple of months or so because they realise that cash flow problems does stifle growth. And I mentioned a couple of months ago that the government was putting a task force together to review the prompt payment code. Now, the prompt payment code, it's a voluntary code that businesses can sign up to, where essentially they pledge to pay people on time, be open and transparent about all their credit terms. But it was felt that the code needed to be reviewed, so a task force was put together. Well, the business minister, Matthew Hancock, came out this week and said that the prompt payment code is now being revised. Of the 1,700 signatories there, they're all being asked now to make sure that they pay within 30 days for any kind of contracts that they have, but with a maximum of 60 days, just to try and free up all this cash that is locked in the system. And so, you know, if the firms that are signed up there don't adhere to this, then there's a possibility of them actually being removed. But the government's also gone a step further. With effect from the end of February, all public sector bodies are now expected to pay contractors and subcontractors within 30 days. They'll be monitored to make sure they do this, so there may be a bit of naming and shaming. So if you are a contractor that works with public bodies, make sure you remind them now about the new rules. You have to pay me within 30 days, and hopefully that will ease your cash flow and allow you to self-fund growth. So, my business finance tip of the week kind of linked to late payment in a way. So part of the problem that businesses have when it comes to cash flow is money tied up in debtors. You just can't get the money out of them quick enough. Well, we all know about factoring and invoice discounting, and we know about the emergence of crowdfunding. And one player which has kind of brought the concept of crowdfunding and invoice discounting together is Market Invoice. So what Market Invoice do? Well, I tell you what, let them tell you. This week I had a chance to catch up with some of the team at Market Invoice, and so I had a chat with one of them, Alex Kyriakou from Market Invoice, to ask him, what is Market Invoice and how do they help businesses? So let's go to that clip now.
I'm Alex from Market Invoice. As you may know, we specialise in both selective and full turnover invoice finance. Unlike most, we don't ask for contracts, we don't typically ask for personal guarantees, and we offer clients the option to pick and choose invoices as and when they require them funded. We've put through 320 million so far on our platform, and we're regarded as the UK's largest invoice trading platform.
Okay. So from a business's point of view then, what would you say the benefits of dealing with you are as opposed to going with a traditional invoice discounter?
Well, typically you find with a traditional invoice financier, you'll usually ask for a contract, and that tends to be a 12-month contract with a 6-month notice. You'll usually be asked for, you'll usually have set monthly fees in place that you'll have to pay regardless if you're using the facility or not. And 9 times out of 10 you'll usually be asked for a personal guarantee, and that tends to be in the region of 10 to 20% of the funding line. None of that applies for us. It's completely flexible, it's peer-to-peer, so we have a variety of investors on our platform that fund these invoices. The first 25% of every invoice is funded by the UK government, and the remainder is funded by a variety of investors such as pensions, pension funds, hedge funds, and high net worth individuals.
Okay, so how can people find out more?
You can go to our website or have a chat with yourself. We're pretty much everywhere on the site at the moment. Go online. It's a very, very slick process. You're looking at a 15-minute application form that you need to complete. We require last 3 months' bank statements, proof ID, and also latest accounts. If we have that, we can have this done and dusted within 24 hours with a solid answer. The quickest we've done something is 90 minutes, which is kind of unheard of in the industry, but it's a very, very slick turnaround. And yeah, very, very straightforward.
So, thanks to Alex for that chat there, and give you a little bit an idea of what Market Invoice can do. If you want to check them out, just go to their website, marketinvoice.com, or as Alex said, just give us a call and we can help you through the process as well. So that's it for this week. As ever, thanks very much for watching and listening. If you did find this podcast and video useful, please feel free to share the link amongst your friends and your colleagues. So that's it for this week. Look forward to being with you again next Friday. Have a great, successful and profitable week. Bye-bye now.